Various acquisitions that occurred over the period last year, we've actually seen quite a nice increase coming through, and not only from, as I mentioned, the consumer spend that we're seeing, but manufacturers, brewers, services firms across the board. We're starting to see quite a bit of economic activity when it comes to advertising and marketing. Give us an indication of what really drove your numbers to this level. Was it acquisition that drove it through to 53% growth, or was it a combination of organic versus acquisitive growth?
Thank you very much. Yes, part of the growth is coming because if you remember, we did the Ogilvy transaction with Ogilvy Africa in 2010. So 2011 is showing the full year impact of the Ogilvy Africa transaction. Number one. Number two is we also have been focusing on growing some of the other disciplines like digital and PR. So they kind of came in line as well. So they contributed to quite a significant amount of growth for us in 2011. And thirdly, as you know, we have had a fairly strong Africa growth strategy. So a lot of that strategy is now happening for us. Challenging, however. Nonetheless, we're seeing the results at the benefit of our investment strategy. So basically, this is just the beginning of a kind of long-term strategy that we've been working on, and it's now starting to bear fruit.
If we could also just touch on the fact that you talked of your Africa strategy expansion, you're looking at acquisitions in Nigeria, Angola, Mozambique. You're also looking to target multinational companies that are perhaps focusing more so on the African continent. Give us an indication of the mix between what we see of local spend relative to multinational company spend.
I think 50% of ad spend in Africa is the telecommunication clients. So, you have the big mobile operators. They're all multinationals, or some of them are Pan-African like MTN. They have been increasing their spend. There was quite a bit of activity because of launch of a couple of new players that came in 2010, 2011. Then you have beverages, which is soft drink as well as alcohol, basically alcoholic and non-alcoholic. And then you have the FMCGs. There are a lot of smaller advertisers in market who are slowly increasing their spend. But for the long term, medium term, we believe it's going to be the big FMCG multinationals, the telcos, and the financial services will be the big spenders on the continent.
What's interesting is that, of course, we know advertising and marketing comes under pressure if we see economic turmoil such as what we saw in 2008. Your share price has risen significantly over the past while. In fact, ScanGroup being one of the favorites for investors. How are you protecting yourself from any kind of ructions coming through in the economy down the line, any possible issues that could affect economic activity?
I think the net is that a lot of these clients are on investment mode throughout the continent. If you actually look at the penetration levels of their product categories, they're pretty low. So what is happening is the multinationals are seeing the opportunity for upside in Africa, and that requires a fair amount of investment in marketing. And so what's happening is that the marketing spend will continue because they need to get more market share. They need to recruit more consumers because Africa, as we keep talking, the last frontier. So that opportunity still exists and will probably exist for quite some time.
What's also putting you in good stead, I mean, you've acquired Ogilvy Africa, Ogilvy Kenya, so that's pretty much also entrenching your position in Africa. But what about other competitors? It is said that there is a concern that ScanGroup in certain areas might just be losing market share. How do you plan to combat this?
I'm sorry, I didn't quite hear the question. Would you please repeat that?
With regards to losing market share, it seems that some investors are concerned that this might happen in some areas in Africa. In the meantime, you have obviously embarked on acquisitions which might actually ensure that you don't feel that competitiveness coming through. How do you plan to combat potential competition down the line?
I think competition will come. But remember, we have a high market share only in East Africa. We don't have a high market share in the other markets. So the new market share going in, we don't necessarily have a high market share there. So we have the competition in the other markets. And there's obviously some amount of competition that is going to come in East Africa. But remember again that a lot of the clients that we work with expect us to deliver services across multiple countries, not only in Kenya. So if you have a competitor who's setting up in Kenya, you may get some Kenyan-based clients, but not necessarily get some of the clients that are Pan-African because we have a fairly large and fairly well-developed infrastructure.